Welcome, ladies and gentlemen, friends and followers, to this latest edition of MIDF Conversations, a thought leadership series where we put in front of you for your Thursday lunchtime accompaniment and inspiration even, captains of industry, thought leaders, and prominent figures from Malaysian society. And of course, thanks to you, everyone here, our faithful audience, for tuning in today as we eke out via these conversations, some gems of wisdom, some plain truth, and even maybe sometimes, if we're lucky, the way forward. So MIDF is happy today to have with us. We are hosting again another pairing, young men who are already starting to make their mark in the world. They are from CapBay. They hail from CapBay, an award-winning fintech startup. And I hope you're already now Googling CapBay. And so let me call on Xing Xian, and the co-founder and CEO of CapBay, and Darrel Ang, the co-founder and Chief Business Development Officer. If I can have them on screen. Here we go.
Hi. Hi, good afternoon, everyone.
Hi, welcome, Xing Xian, or XX, as everyone calls you, XX, and Darrel. Welcome to the show, of course, welcome to the show. Before we start, let me just tell you who we have here in the audience today. I'm just looking now at the registration and attendance list. So we have listening in CEOs and chairmen of company, finance professionals, strategists, fund managers, members of the media. We also have some from the regulators. So, you know, you should of course be open, but remember, there are regulators amongst us, and students, a large contingent of students from UKM and Unimas in Kuching. So I think it's a great audience. Everyone's here is to listen to you, really, and so no pressure, of course, no pressure. We're just going to have fun this afternoon. I'm going to kick off with an easy question, okay. And to the two of you, and we'll see how this goes from here. Let's start with, what is CapBay and how do you get here?
I think we can say what is CapBay. How do we get here is a long question, but it's there's a long answer to the short question. So yeah, anyway, so
let's try.
CapBay, so I think just introduce, so CapBay, we are actually a supply chain finance company. What we do is pretty much everything related to supply chain finance. So on one hand, we have CapBay Finance that actually provide financing to the supply chain finance to the businesses, whether it's mainly via our P2P platform, CapBay P2P platform, where each and every one of you can also invest in SME financing. On the other hand, we also run CapBay Enterprise Fintech Solutions, where we actually run the multi-bank supply chain finance platform in Malaysia with multiple banks participating on our platforms to provide supply chain finance solutions, leveraging on our technology.
Oh, okay, good. But it's all right. I mean, that's a very brief summary, and I think just from what I've seen, I think there's a lot more that we can drill into in each of those lines, as you mentioned.
Yes.
But so how do you get here? I mean, let's go back,
okay,
back a little bit. I mean, because now you already have something like you mentioned just in the video, more than 1,000 customers, right? More than 1,000 customers already, and the amount that you have disbursed is more than 1 billion ringgit.
Yes.
Ringgit. So yeah, how was that journey to get to this point?
Yeah, it all started, I think, 5-6 years ago, where I think we had this idea of starting doing this invoice financing. Back then, we were just thinking about simple factoring invoice financing in Malaysia, and then we always wanted to. I think we love business, we love finance. We wanted to start a bank ourselves, but that's going to be a big stretch, like for a few guys to start a bank. But I thought the closest we can get to was actually to start, something like a P2P platform, so people can invest money and lend to SMEs. Anyway, that's how kind of four of us got together, and then we started the very first few financing very simply just using like our own pocket money. Like I mentioned just now in the video, with 6,000 ringgit, we actually really just set up a simple website. You really just set up a simple website, try to do some marketing, ask anyone interested to do factoring or not. Factoring is not, we don't need a license to do factoring in Malaysia. So we just set up a simple business, lend somebody who's some UMP supplier, for lab equipment, 6,000 ringgit, that's how I remember. And then I think it just grew from there. And then from there, we learned about supply chain finance. We have more and more people. I think the whole company really actually grow when we start having very good people joining the team. And then, and these some of them, whether it's with experience from banks or experience from different industries, and that kind of bring together. And then I think we initially, when we first started, we more mainly focused on working with the banks to provide financing. It means like we just provide the platform solutions. And then in 2019, we got approval from Securities Commissions to also operate P2P financing platforms. This is where we were able to open up all these SME funding opportunities to make it into an investable asset class and allow public investors to invest. So that was actually 2019, 2020, and then since then that had grown quite well, and then we end up becoming I would say the largest platform in terms of disbursement, monthly disbursement volume each month or each quarter since I think last year. And I think that's kind of how the business evolved over the past few years as well.
So now the space that you're creating for yourself, I mean, of course, you said you are investment vehicle, of course, that's the P2P side, and also the financing to SMEs, right? So this the space that you're creating for yourself in between these two markets. You see yourself as a competitor to banks or complementary to what is already out there?
I think it's very complementary, because I think going back to CapBay's mission statements, our mission statement is actually to build the financing infrastructure to enable smarter and more inclusive financings to businesses across Southeast Asia. So I think we specifically define it this way because therefore the focus on our business is actually about technology, about the infrastructure, whether it's tech infrastructure, operational or regulatory infrastructure. And then our mission is not about providing as much financing to SMEs as possible, but it's about enabling a lot more smarter and more inclusive financing to SMEs. So we want to work with multiple parties, not just ourselves, not just the banks, not just in fact, we spend a lot of time working with individual investors via our P2P platforms, and also asset managers, institutional investors who would like to invest into the SME financing asset classes, and even opening up our platforms for the banks to participate. So the whole idea is that with the platform, the banks can serve their existing segment better. They can serve the smaller SMEs that they previously couldn't serve that well, and then at the same time also open up the same opportunities for the rest of the capital market to actually invest, to fund the SMEs alongside them as well. So it is it is meant to be very complementary. Yeah, so we actually have never seen the bank as our competitors at this moment, not since we started.
Yeah, maybe just to add a few things. I think in terms of our target market as well, it's actually quite different. So I think we really are looking at the underserved market, the tail end where banks are unable to provide financing to the SMEs. I think through multiple reasons, either transaction size can be too small, or sometimes it's a segment that aren't really able to provide strong enough financials. I think that's typically one of the big reasons. And I think thirdly also, I think in terms of volume, right? So some of the transaction sizes we're doing is like 10, 15, 20 ringgit, by very, very small transaction sizes that banks aren't really able to do. And I think here why we're able to kind of go to this level is not just because we're hungry. It's also because of technology that we introduced to actually to the whole process. I think this is the way forward, where I think we're able to kind of go down to the masses and actually really look and see at how the smaller SMEs are able to get financing as well through some of the technology and some of the processes that we're able to introduce to the alternative financing space.
I mean, it's interesting that you mentioned technology, Darrel. So do you just mean because you are online and you don't have bricks and mortar assets, so you can therefore be cheaper and more accessible, or is there something even deeper than that? As in the way you assign credit ratings, for example, the way you assess credit of the lenders.
Maybe I can take that. So yeah, actually that's very right. So it's I think there are multiple things. So when we would look at what took time for supply chain finance, we realized that the biggest challenge is that it's actually a very transactional kind of financing. So just to give the background to some of the audience who are not familiar. So when SME get financing, they can get they can get term loan, or they can get term financing, they can get revolving credit, or they can get invoice financing and some of the other financing. So in the event of things like term loan, usually the banks will just do the evaluation one time, and then after that the financing will just be dispersed. But then things like for supply chain finance, we are actually financing every single invoice, right? You know, whenever somebody need to buy something or sell something, we actually come in to finance that particular transaction. So we need to eventually validate a lot more things like fraud risk, dispute risk, double financing risk, or I think there are a lot more risks that is involved, which is a lot of operational risk that it doesn't concern the typical term loan kind of financing. So term financing. So therefore, what the platform come in actually are trying to solve two things. Number one is at the very minimum, I think the management of every single transactions to ensure that, you know, the transaction reporting, visibility of every single transaction, tracking, the tracking, like what Darrel mentioned, a 20 ringgit transaction needs the same tracking as well. So all those things needs to be done, cannot be done by the human. It's going to be too expensive. And then even in terms of the ongoing monitoring and the upfront assessment. So I think just a very simple example, you know, when we evaluate, I would say when we evaluate a simple bank statements, I think, and the debtor aging, we get so much more understanding about SMEs rather than through the financial, which a lot of situations for SMEs is outdated and not so accurate. So from bank statements, we are able to understand, for example, if somebody who have this client been selling to, who have they been buying from, what's the kind of a monthly payment patterns, and what's the leakage from the companies to the directors, and all those things are the things that a computer can do much better than human. And then so what we do is that to actually use the technology, and basically instead of human going through the whole thing, computer going the whole chain, this will then come up with a summary that a human can interpret. So some of these things are things that we really introduce to enable us to do deals that wouldn't have made sense for the traditional financial institutions, because the same effort would only make sense if we are talking about like a 5 million per transaction. Yeah.
Okay. So I mean, just before we continue, I just want to also to remind our audience that, you know, you're very welcome to send in your questions via the Q&A button on your screen. Please, of course, do include your name as well, because then we'll be able to tag you and thank you, you know, as we read out the questions. So, you know, please do be, you know, participate in this conversation as well. I mean, so as you're saying here, then exact. I mean, there's definitely a lot of reliance on technology, but you're not from technology background, right? Both of you. I mean, you're.
Yeah. We're not. I think we pick up from scratch. I mean, we learned a bit in like maybe one course out of the whole 3 years university we did learn. But I think as a young company, we had to just really learn it from scratch back then, and then we developed the very first version ourselves. That was not functional at all, obviously. But then I think that kind of formed the base, and then over time, as the company grew, we managed to actually just bring in very talented people from some of the digital banks in the US, some of the tech unicorns from other places to actually lead our technology effort. I think we are just very lucky to have very good talents who are willing to join us on this journey.
I see. So you have your own in-house developers, your own engineers, as they call it.
Correct. I think about 25-30% of the people are actually in technology team.
Oh wow! Hey, wow! That's how many people do you have right now?
I think we have I think we have across the group. I think together we're close to about 100.
Yeah.
Okay. I mean, like in 5 years, you've already grown to 100 employees. That's amazing. That's amazing.
The other way to look at it is a cost lah. But the growth is how much business we need to grow over 5 years rather than how much people we grow over 5 years. But of course, I think we're very happy to have the team lah. Just saying that we never try to measure ourselves from number of people. We're very scared when the number of people grow.
Yeah. Oh, really? I mean, of course, it is a cost, but also I'm also looking at it from. I mean, I'm sure all of your employees are well justified, right? They all have their roles.
Yeah, they are.
So, I mean, it's definitely pointing to
everyone.
Yeah.
Everyone, yes.
Yeah. But I mean, of course, it's a young company. It's five years old. But is your team similarly young? I mean, just picking up on that point. I mean, how old are your people?
Generally quite young. I think on average, probably about 26. I think our HR did like a check, and I think it's about 26. So I think. But having said that, like what Xing Xian said, it's a combination. We do have quite a few senior people as well. It's just I think we do have generally quite a young team that is able to learn and willing to learn. I think that's one of the key things, and I think the passion for finance and doing the services that we do. So I think maybe just to latch on, I think to the previous question in terms of whether we had tech background, I don't really think it's a necessity. I feel also it's something that what really motivates a person is also in terms of their interest, in terms of their subject that they do. So although we don't have a lot of tech background, I think all of us, actually all the founders actually have a very strong financial background. Xing Xian has quite a few. He was working with Creador before, private equity. He was in Credit Suisse as well before, doing on the trading side. So very broad and very big spectrum in terms of the financial knowledge that a lot of the founders have. So I think that actually really drives us actually in terms of the passion for the SME financing space.
Yeah, I think actually, in this case, really is other than, we other than the fact that it's just tech, I think a lot of it is also, I think it just require a much broader skill. Like for example, I think how we look at deal structuring and actually obtain funding to fund all this operation, and then Darrel get involved a lot. I think, of course, speaking from the fact that back then when he was in Credit Suisse in the IB side, so and also Edwin previously from on the consulting, financial consulting, doing all these deal transactions. So and all these assurances. So then he became very suited to do all the became our CFO. So you can see that is a lot. So end up the skill set that we realized that the skill set required to run this business is so diverse that it actually get quite crazy. I think we are lucky enough to happen to have people with very relevant background to kind of the founders from very, very diverse but relevant background to come in to take care of the relevant areas.
Yeah, it's true. And actually, I want to touch on this, what you mentioned there, Darrel, in terms of the passion for finance, passion for the work you're doing. But I'll come back to that later, because really this point about, I think we also have to acknowledge your other partners, co-founders in this venture, right? You mentioned Edwin and Dion also. Yeah. So I mean, so the four of you just sat in, as you said, you just sat in the living room and decided to do supply chain financing, or how did you come to that decision? I mean, in fact, I think there was a question here. Let me just pull up this question from Sharifah. I think we can see here, and she's saying, yeah, why was it supply chain financing instead of just generic
BP
financing?
Okay. Yeah, I think maybe I can.
Between the four of you, you were sitting down and playing cards, presumably, right? Playing cards or Monopoly and something. And then someone said supply chain financing. Let's go.
Yeah. Okay, so maybe why supply chain finance? I think we were looking at different types of financing products to the different financing products, and then we also started studying how different different approach to serve the SMEs. So we realized back then that the classic P2P or any alternative financing that was done in the market was very much based on a simple idea of, okay, since the bank's credit appetite is here, our credit appetite is higher, so let's finance this group of clients, and then since it's riskier, we charge higher rates. So that was a very I think back then, I think 5-6 years ago, how most of the alternative financiers came to work on it, and then they were just trying to compete from there, improve the processes, make it simpler. But in terms of risk appetite, it ended up basically end up taking the higher risk clients. So we decided that we think that there could be a different way of doing it. I mean, not saying that that doesn't work. That worked for some of the quite a few companies. But then what we realized was that if we just change the approach, then maybe we actually can help the SME a lot better. So I think the classic example of, if you are a supplier to the government of Malaysia, and then it takes the government 90 days to pay you, right? So if I can fund you the money and then wait for governments to pay me, my risk is close to zero. In fact, we have done hundreds of millions of transaction financing where the receivable is a government payment directly to us, and we never had any default on that, and that's great, right? So when we look at that, then we realize that actually every single SME has a very precious asset on their balance sheet called the receivables, and that is actually not being monetized. That's not being considered at all. So then why is no bank looking at it? And then we realize that actually the banks know it. The challenges is, how do we actually really extract that? Because it is just so difficult to think about how to rely on that particular asset. Because if it's receivable, then we need to know whether this receivable, this invoice from government, is it real? Is government really going to pay it? Or is there any dispute? Or have you actually already sell this receivable to another lender rather than ourselves? And then even if the government paid, how do we ensure that the money always comes to us? So that's kind of like I call it the ring fencing structure, whether it's there. So when we look at all these things, right, to ensure that we are able to rely on this simple concept of financing based on government risk for SME, there's just so much operational work that needs to be done. And that's where we think that, okay, somebody need to build the infrastructure to do it. And then if we get the infrastructure right, we will be able to, we have created something. We have created a government level credit credit out of SME who are considered unfundable, not even fundable by any bank. So I think that's it. All started from there, and then along the way we started adding more products and tech to make it happen.
I mean, I can see that that's your value proposition, as it were, because I mean, as you say, I mean, the concept itself is not rocket science. Everyone knows, SMEs are out there, but it's, what you have brought to the table is how to do it.
Yeah.
And how to make money from it, I presume, as well.
Yeah. I think actually, just to share the example, right? I mean, for example, just now we're talking about SMEs who could be going to the non-bank lender or informal credit, right? And then they could be paying 3-4% a month. My father's used to be now a retired fisherman, and he constantly tell me that it's quite common for them to pay 3 to 5% per month just to get their cash flow rolling, right? So for all these SMEs, instead of paying 3 to 5%, their willingness to pay is that 36 to 60% per annum. But then now we have created by doing all these things, we have created a financing structure, a financing asset where the risk is a government credit, which people are happily taking it at 4-5% per annum. So that created there's a huge gap there for everyone to make, right? Investors get more money, we make more margin, and then SMEs get much lower cost. Yeah.
And I think then is also quite admirable, and I mean how you made this into your mission as well, so to connect with that underserved segment, right?
Indeed. Yeah. In fact, for example, when we look at back then, the fishermen, right? They a lot of them, the only reason why they are not, some of them are actually relative. They a group of fishermen, they can actually sell directly to supermarket directly. But then a lot of the situation they don't, not because they don't want to do it or they cannot have access to supermarket, but a lot of it is because they know that the supermarkets will take sometimes 3 to 6 months to pay if it's like a frozen fish, fresh fish, maybe 30 to 90 days. So they cannot wait for that period. So a lot of them will sell through the middleman who actually doesn't do much other than paying the fisherman fares and collect later. So that is what I realized, that if we don't try to solve this kind of cash flow issue, SMEs will always remain SMEs and they won't be able to grow because they will always be, because they will make less profit given the layers that they have to go through without the right financing services in place.
Yeah. So maybe just to add on, I think one of the things was how we kind of differentiate ourselves. I think we are definitely out there to lend as much as we can to SMEs who are underserved. But I think the real question and the real difference is, it's easy to lend money to someone, but is it easy to actually collect it back? And that's where we kind of differentiate ourselves, where I think, we are lending a lot of money to the system. We're pumping in 1 billion last year to the system. But I think what we do as well is actually we manage to keep our default rates low. I think this is one of the questions also that some of the audience had, like in terms of like
not low, right? Your default rate is 0. So and we don't have to be too modest here, Darrel. It's not low.
I wanted to qualify a little bit because maintaining it at 0 forever is something that some people may even question, right? Like, are you even taking enough risk, right? Because if it's 0 all the time, it's like are you taking enough risk? But yeah, I think so we actually do spend a lot of time, like what Xing Xian mentioned before, in terms of really understanding the business, the transaction, to actually ensure that credit underwriting is actually up to par, and so that a lot of these funds that we've disbursed, we're able to collect back. So I think that's also one of the reasons why we've focused on supply chain finance. I think a lot of banks out there actually prefer trade finance as an asset, but the real issue is really on the operational side, where it actually, from a cost income perspective, it's very heavy because, like what Xing Xian said, it requires a lot of people, a lot of people to actually, do the validation, do the verification. But for us, we are able to use the technology to run a lot of this validation, and that actually makes it a very attractive asset class. And we're actually seeing quite a lot of institutional investors also interested in this asset class. So, just to kind of put it out there in case there are some fund managers out there who are looking at the peer-to-peer financing, specifically supply chain finance.
Yeah.
I mean, so it's amazing. I mean, just touching on that 0% default rate. Of course, again, as you say, we don't want to jinx it, but the numbers are the numbers, right? And so currently 0%. So I wanted to say, the stuff that you're doing with SMEs definitely resonates well with MIDF. I mean, because we've been doing this, sorry, again, not being modest about this, but we've been doing this for 60 years, right? Since 62 years, actually. And we understand, as you say, the role that SMEs play in the country's development. So that's fine. But we have NPLs. I think that's, the similarity stops there because we have NPLs, but hopefully, of course, let's keep that number low as well. So, I mean, it's good. Just on that. So you said, so how, and I think this is a question, let me just, again, from one of our audience, I think, just try to get. How do you keep your NPLs low? I mean, you said good credit rating. Is it just good credit rating? And I mean, of course, XX, you alluded to using technology, machine learning from this, but is this something that is replicable, scalable, or is it just, is it just CapBay's secret sauce? I mean, there are other people out there also who claim to have good credit rating, right? I mean, CITOS, for example, CBM, MIDF, we say we have good credit rating, right? But, I mean, what's your secret sauce?
Yeah. I think we are lucky to, in a way, okay, I think maybe to also qualify, I guess because of the space we are in, right? Supply chain finance, if you look at some of the subsection or subsection of supply chain finance, actually, because the nature of the asset class, if done very well, actually, whether it's CapBay or any other player out there, the default rate has always been very low. So for example, if we talk about we call it, so in the supply chain finance is a very broad word, right? So pretty much if you finance anyone to help them buy or help them sell, it qualify some way under supply chain finance. But if we think about under supply chain finance, for example, there's one part of the subsection of supply chain finance is what we call a post-delivery, post-approval financing. The typical risk in the market, we're talking about less than 10 basis points, and it is across the board. So what it means is, I think just using the example just now, SME supplying to government, if the government has already received the goods and services, and the government has already looked at the goods and services and accepted it, you will imagine that the only risk left is when government is going to pay, right? So of course, then the risk is very, very low. So the question therefore is, I think kind of unfair to also compare us to other lenders who may have like a higher default rating just because the nature of the product is very different. I guess the only reason why all this while, then I guess that people always ask the question is, if it is so good, then how come the rest of the people are not doing it? And that's where the secret sauce is not so much in like the credit scoring, all those things, but it's more in this process risk. I call it the transaction risk scoring, if anything, right? Is for us, if we have to look at the transactions, then how do we really take into account of the transaction risk, like the dispute and set off? So these are not the risks that traditional financial institutions look at the SME levels, because currently the standard so-called credit evaluations pretty much rely on your bank statements, your P&L, balance sheet, and all that, right? For us, those actually mean very little. A client that may look very risky to a bank actually may look very safe to us, and vice versa. Yeah. So because of that I think choice of where to play, and then focus our capability and operational aspects to play in that particular space. I think that's where we have been able to keep the default away from our P2P platforms.
Yes. Wow. I mean, okay, fine. I mean, that makes a lot of sense. I mean, kind of like.
So we're not trying to like tell everyone, we are so special. Everyone is got default, we got not default. I think it's just really the choices that we make and the investment that we make to enable us to play in that space. Yeah.
So, taking a couple of questions here from the audience as well. I think there are some similar questions, I think, from Fazlin and Max Azaham as well. So, I mean, they're talking about human intervention in your process. Is there, I mean, so with as you said, fine, maybe not so much the bank statements and so on, because I mean, I'm sure these are accessible online, but for you to understand the nature of the company, the nature of those receivables and so on. So is there, how much human intervention and how much of this is just pure online?
I would say like maybe I think I split it. I think maybe we say online, that's kind of the channel. So in terms of whether online or not face-to-face, I think that's something to discuss. And then separately is even when things are digital, then is it straight through or how much human intervention involved along the process. So in terms of the dealing with the clients, typically the entire process actually can be done digitally. I think if anything, usually it's because our guys try to see the opportunity to do more business development with the clients, to get more referrals or get some feedback. Then quite common, then our people will go out and have that kind of face-to-face meeting. But that's more on the channel perspective, right? And then I think nowadays eKYC, at least it is like, for example, onboarding of users on our platforms. I think nowadays all these things can be done via eKYC. So I think that part, so no face-to-face is required. Then on the other hand is pretty much the processing part of it and how much human intervention is there. I think we are currently looking at somewhere around, I think we are aiming for at least 70%, I'll say, by the tech, but I think right now we are somewhere at about 50%. So it's also not, so I think the approach that we are taking is not so much on at least not going fully digital, but it's more of having the systems to take out as much work as possible, and then human can make a judgment. But then on the other hand, how we further make it fully digital is where we actually then we actually found quite a few segments where everything can go fully digital and straight through. So some of the situation where we actually started working with ecosystem players, like whether it's a payment gateway or like marketplaces, and also some of the vendors to a large paymasters. We actually work with all these guys where they started feeding their data to us. And then because of that, right, a lot of the questions that we concern that we had would have been gone. So for example, validating whether the data is true, validating whether the sales is true, collecting the funds, all those things are all gone. So because of all that, right, some of those partnerships therefore allow us to go fully digital for not just in terms of like, the acquisition of the client, but also in terms of all the backend processes as well. So you can see that this is actually more like a step-by-step process, and I believe that so far we are quite happy with the process, progress so far over the past few years to digitalize a big part of the business now. Yeah. So to the point where sometimes we realize that the expectation, to the point where we start realizing that it is the sense of what is manual versus what is not, what needs to be manual is very different in CapBay and outside CapBay already, because everyone start having this sense that the moment you need to start touching, you feel like it's manual. I think it's just, but only the people who kind of were outside have done it elsewhere before, and they come in, then they'll appreciate it's digital, because I think people start getting used to it, right?
Yeah. I think it's good. I mean, that you're also at the same time redefining, what is digital versus non-digital, right?
Yeah.
People are coming through. They're coming through your pipeline.
Yes.
Maybe just a little bit more on still, understanding, again, how you're making money, right? I mean, of course, and I'm just trying to take from a question from Quetzal, who is from, let me just check. Quetzal is from The Edge, actually, right? So this question here, I mean, of course, you said because the receivables are from governments, but even the government pays late, right? So how does that build into your business model?
Okay, so I just give maybe a bit of the marketing to the investors, so but I think that will tell pretty much on how we make the money. So whenever SMEs, let's say, using again the government vendors example again, right? Where if they have an invoice from the government, let's say to be paid in 90 days. So when they take the financing from us, they'll pay a processing fee, we call it the origination fee, and then they'll also pay the profit rate or interest in the situation of a conventional product, right? So so what we make money from the origination fee, so that's our fee income, and then we also take a spread from the interest, because this financing charge, this interest that so-called borrower are paying, the interest actually is the income for our investors. So we actually take a spread. So on average, our borrower pay about 11% on our platform, and then we get about 3% spread, and then we actually offer our investment, the investment net return to all our investors so far. Is it 8 or 8.37? Around that range.
8%. Yeah, this is also post fees. Yeah.
Post fees and everything. And these are, we're talking about relatively short-term investment. These are 3 months, less than 6 months generally.
Yeah, generally less than 6 months.
Yeah.
So definitely, a different asset class. So I think maybe just to add, for some of the traditional investors, I think we've seen quite a bit of a shift from the traditional assets. I think last year, or rather this year, the SE annual report, we've seen quite a big jump from the alternative financing space. So I think last year, 2021, the P2P, peer-to-peer financing and ECF has garnered about 1.4 billion, as opposed to the VCPEs, which I think was around 1.1 billion. So we've actually overtook in terms of the size, and since 2020 it's actually doubled. So I think the ECF P2P was about 640 million. So we more than doubled this year, and I think this will continue to grow, and this we're coming to become a more mainstream asset class that hopefully investors can take a look at.
Yeah, actually, I mean, I think just even without going the data, I think 2 years ago, expecting fund managers to put money into CapBay P2P was almost impossible. Now we are having more fund managers. In fact, we have asset managers set up a special product, a special fund just to take on all these alternative SME credit, for their investors. So that really show how the industry is really.
I mean, it's really actually a good time to move on to the other part of the business, really, the investment side, right? So the P2P investment side. I mean, in you talk about fund managers. How actively are you marketing to institutional fund managers, or are your investors more, the retail segment?
So I think it's a mix. I think so prior to the peer-to-peer financing, we've actually been always targeting institutional funders as well as banks. But I think what we thought is that since we already have all the process and systems in place, why not open it up to the retail public? And that's why we applied for the peer-to-peer financing license that we got in 2019. But so we still focus quite a bit in terms of the retail. I think but largely majority, more than 60-70% is still from institutional investors. But the retail investors would still play a huge role in terms of the diversification, in terms of the sources of funding, and having like hundreds and thousands of investors supporting each node, as opposed to just a few institutional investors supporting each financing node.
Yeah. I think we actually, but in terms of our engagement with institutional investors, it has grown a lot more. I think last time was a very simple situation where let's just we market our product as an investment instrument to them. But now because of the fact that P2P is getting more mainstream and the regulators are being very supportive in getting the asset managers to kind of to put a bit of the huge Malaysian bond fund asset into this kind of asset, this kind of alternative credit. So we start moving from just pitching for investors to put money in, to the point where we start working with the asset managers to actually create an investment product to cater to the investors. I mean, this is especially true because I think last year, I think this is a very weird time where everyone is sitting, don't know where to put in. I mean, the market is just keep on going up despite the all this imminent potential risk of inflation, there's rate hike, and the war that's going on in Ukraine, and the funds just keep on going up, right? So everyone don't know where to put their money. Bond investors are worried that the rate hike might be higher than expected because of inflation, and then the equity investors see the valuation too high. So everyone is sitting on all this cash and they want to deploy somewhere where there's 3, 6, 9, 12 months kind of investment. So then that's where we start seeing really a lot of demand, and that's where it really evolved. Now is really going into like almost like a product manufacturing, a bit like investment product manufacturing per se.
I mean, but certainly, as you say, it's a new investment asset class. I mean, I have to admit, I've kind of like dabbled into a little bit of this P2P in the past, but now to consider it as a, as a part of my investment portfolio, I think it's getting there definitely. And if you're offering something like 8.3%, I mean, it's some not to be sniffed at, definitely.
Yeah. We cannot offer like the 12-15% other alternative investment asset. But I think in terms of the risk reward ratio, I think the 8.5% is really nice. It's quite sweet. Yeah.
Maybe I just want to see, let's you've already come to a great place, and I also have to mention here, the awards that you've won, very recently. Like as I said, CapBay is already starting to attract the right attention for sure. Something that makes you FinTech Startup of the Year, Best Financial Supply Chain Management Company, Best FinTech, and so on. But of course, the most recent was the EY Entrepreneur of the Year award. So congratulations. And I think that really puts you in a very small elite category of those people who are, based on EY's criteria, right? That you're really using your unbounded energy and ambition to transform the world. So, how are you taking this? Is the team excited? Or I'm sure they're excited, but where do you go from here?
Yeah, I think now is the time to finally with the borders open up, I think for us to continue our plan to look beyond Malaysia. I think that's one. And number two is I think our plan all this while is actually more about connecting not just the local trades, but actually cross-border trades. So our vision is really that at some point a Malaysian company can sell to Indonesia company without worrying about collection, cash flow, and without all the complication today involved in getting financing for that trade, when especially when it's an export trade with traditional institutions. So I think all these new things are going to be implemented, and then with the digital banks all coming on, I think likely turning on by next year, then I think our multi-bank solutions are going to be, I believe that you'll actually be very interesting, because even though right now the awards, the license hasn't been given yet, we are already talking to multiple applicants to be potentially supporting them upon that. So I think we just see a lot more opportunities, and everyone's very excited about it.
Yeah. I mean, that links very nicely to this question from Zufazlin Baharudin from Bernama.
Yeah.
So what's your target to help more SMEs this year? I mean, you talked about definitely cross-border, linking them up cross-border, but do you have any specific targets to assist SMEs? And that's number one. And the second part of this is on the COVID-19 situation, and again, how does CapBay support SMEs in such an environment?
I think in terms of the target, I'm not sure. I think just now what I shared, those are kind of like non-financial. But I think at this year we are looking at disbursing 1 billion across the group to SMEs. I think that's about almost double of what we did last year. And I think last year was I think last 2 years really was quite difficult for the SMEs. So I think what we did during that time was really ensuring that despite the whole COVID scenario, we were able to keep the financing flowing. I think, in fact, while we actually didn't have to practice any so-called moratorium, very minimal, maybe 1 or 2 clients, but then and the orders got settled within like weeks. Then other than that, I think we actually really ensured that all the financing went through last year, despite throughout the COVID-19 situation. While the common expectation is that the financing volume would have flat in light of the risk, right? Our actually financing volume actually went up more than, I would say, what, 600% during the period. Yeah. This and still managing the risk, yeah.
Yeah, so I think, maybe just to add on, I think the key thing for us was, with the whole COVID-19 situation affecting a lot of the SMEs, I think they were all surprised by it. I think it was really a shock. I think the key thing for us, like what Xing Xian mentioned, was really to get the financing in place so that, there's still the lifeline, because ultimately cash is still the lifeline of many SMEs, and we are able to bridge the whole situation where, first they can't really see the light at the end of the tunnel. So I think by providing the financing, they're able to sustain. And a lot of these businesses, are actually quite solid, like in terms of, they've been operational. Just that, unfortunately, they don't have the capacity to actually withstand, many months of no operations, the whole lockdown scenario. So I think that was one of our focuses where, being the lifeline for a lot of the SMEs. I think second one, I think also we did help quite a lot of the SMEs. I think, for example, in the healthcare space. So I think there was a surge in terms of giving out COVID-19 supplies and test kits and so on. So I think this was another area that we wanted to really help out and we funded quite a lot of financing in terms of the healthcare space.
Yeah. Actually, I think I talked to some of the clients. I mean, most of our clients were able to get their supply to the front line much faster than industry peers, and then that allowed them to just do a lot more business, and that I feel like, we really saw how our involvement ensured that the supplies of all these critical materials to the front line were made possible because of our financing. Yeah.
I mean, that's great, guys. I mean, it's just good to hear that you're serving in that area, because at the end of the day, cash is king. I mean, and of course, something you do, any CF book will say, okay, this falls under cash management strategy, right? But as I say, as I said right at the beginning, the value proposition that you bring to the table is that you make it possible, right? I mean, it's just taking it from books and into the hands of the SMEs. And it is great. But 2022, the outlook for 2022 was just your quick thoughts on that.
Yeah. So overall, as a whole, I think just from the macro perspective, we really see that this year will be continue to be a tough year, despite the fact that the COVID is coming hopefully to the endemic phase, right? Things are becoming very, very tough. It's not because about whether things are faster, the business are faster or slower. It's the fact that the rapid changing actually disrupt a lot of the players who are not adjusting to it. So, for example, all these material prices went up over the past few months, and then labor costs going up, material costs going up. A lot of the contracts were actually contracts that was actually still entered into right before COVID, and we are seeing that, for example, at some of the industry, like for example construction, that's gonna really, we feel like they're gonna suffer a lot, and then because of that, it kind of trickle down, and then same for the developers who, while as the central bank continue to tighten the credit, then the purchases from the developer may not be that high, and yet now because of the material costs going up, they need to sell for more. So because of that, we see that these particular industries and some of these industries where we have some exposure to will remain very, very weak, and we are trying to be very careful. So what we end up doing is actually moving a lot of our exposure away, and then to some of the industry that we think are growing. We continue like logistics, and we think that e-commerce continue to grow. So I think we're putting a lot of effort into logistics and some of the new innovative products like e-commerce merchants as well. So these are the new things that we believe that we're going to be focusing on, and we believe that will drive our growth this year as well.
I mean, definitely looks like you're going to continue to be busy and continue growing with the targets that you set for yourselves, as mentioned earlier.
Yes.
So are you hiring? And I'm saying this because we have a lot of university students out there, maths and econs grads as well. So will you be hiring?
Yeah. I think we're definitely continuously hiring. Not just from fresher. I think I saw one question in terms of how we kind of train. I think so we
How
do
do you
like
retain
fresh
your
grads
staff? Yeah.
Yeah, how you think? I think it's really like it's really a continuous learning exposure. I think even for us as well, co-founders, we're not like many years in terms of doing management stuff. So I think the responsibility that's given to a lot of the staff as well as exposure, and I guess the continuous learning and steep learning curve does really drive and excite a lot of our team members. So I think this year, like what Xing Xian said, I think whatever you mentioned just now can actually just change within 6 months, and actually that actually makes it quite exciting for a lot of people, where in the sense that we're always changing and we're adapting to the latest changes. In terms of the market movements and so on. So I think being nimble and being able to capture market opportunities just drive a lot of and excite a lot of our team members.
Yeah, and of course, on the other hand, it also means that it's also not something for everyone, lah. So it's one of the things that we always try to nowadays warn a lot of the incoming candidates or even the fresh grads that look, it's not going to be easy. It's tough. We also admit that we are not the most experienced manager, right? We only started taking management role over the past few years. We were all fresh grads before this, right? So, but I think one thing really ensuring, I think we try to make it very clear to people that this is the culture, this is what we are offering, in the sense that, the opportunities to be dynamic, to learn a lot, to push yourself. And then if people kind of see that that's what they are looking for, I think then we really will work very well together.
Wow, that's great. I mean, I suppose you've identified the characteristics, the attributes that you're looking for. So I'm sure, you should both be expecting a lot of CVs in your emails.
Great.
So it's quite a lot of roles that we're looking for. So
across all levels.
Because you mentioned that you were fresh grads, right? So I have to embarrass you with this disclosure, right? To the audience, as you said, full disclosure. I was reminded that 14 years ago, I interviewed XX for a Yayasan Kazana scholarship. So I hope I didn't give you such a bad time during the interview. Whether you got the interview, the scholarship or not, I hope you've grown from there, and it's great to see you here, man. It's great to see you. Yeah. It's just wonderful how life weaves our paths together, and from the interview table 14 years ago to now another interview. You can't make this up. It's fantastic.
Yeah. So later will you be sharing the assessment form?
I'll dig it out. This guy talks a lot. Yeah. So actually, I think there's so many questions here. You can see there's so many questions. I just want to take maybe a couple more. I think we can do a couple, but maybe we talked already about your plans for the future, your plans for this year. Definitely, in terms of your people, I think you definitely you have a way of keeping them for sure, and you're growing. We talk about your successes. Also congratulations on your deal with Kenanga. So you maybe just touch on that a little bit.
Oh yeah. So I think we actually work with Kenanga very closely. So I think last year we actually made a very conscious decision on growing our Islamic finance segment. So I think part of the reason also because we realized that there is a lot of demand from the the borrower who wanted a Sharia compliant financing product. From the investors, almost everyone, one of the first questions they ask is whether we have a Sharia compliant financing investment asset. And then interestingly, also our staff actually have been requesting for that as well, because that, I mean, they feel right, working on the more the Sharia financing products as well. So because of that, we took a stake in Kenanga CapBay Islamic, 49%, and then at the same time, I also end up becoming a CEO over there. And then since then, the two companies work very, very closely together, where I I think we were focusing mainly on learning from the Kenanga CapBay Islamic about how to do Sharia compliant financing. At the same time, trying to digitalize Kenanga CapBay Islamic to transform it from a very traditional factoring companies into a digital supply chain finance platform.
Yeah. So I mean, that's an opening up another front for yourselves as well. So maybe just to close off, and this is linking this with another question here about relaxation. Would you be happy to see relaxation in the requirements for supply chain financing by the regulators? Would this be something interesting to you? But maybe I want to also broaden that to really ask the two of you, execs in Darrel, what if anything, what's your wish list? Whether it's from the regulators or whether it's from the market or from your customers, what is your wish list?
Mm-hmm. I would share the one for regulator. Darrel can share the rest. Yeah. Okay. I think we are always engaging the regulator. I think some of the things that we are hoping for is really, I think, like for example, including this P2P investment note being one of the approved asset classes for some of the traditional funds. I think ultimately Malaysia, we are sitting on tens of billions of a bond fund, right? All these funds currently are going to the corporates, and then how do we ensure that even the 0.1% of that go to the SMEs in Malaysia? That will actually mean very meaningful growth. So I think the interests are there from both parties, but I think now having the regulators to help facilitate, simplify it. So I think that would really help growth the SMEs, and of course at the same time, I think there are a lot more. There are a lot more than just the micro SMEs who are looking to get financing. I think we are looking at some of the mid-sized companies who actually require financing from P2P platform as well. So I think hopefully at some point seeing maybe a different class of the P2P platforms where all these are actually made possible, then I would think that it will make P2P financing industry something that can have huge growth impact on the Malaysian economy. So I think just in a way opening up the restrictions. So I believe that regulators are also looking at that. I think so I think it's more of like seeing that happening soon.
Okay, I mean that's I hope that happens. Darrel, from yourself.
Yeah. So I think got very broad audience, so very hard to tackle. But I think if I could summarize it all, I think I would say just be open and try something new. So it's like multiple aspects, right? I mean, you also have like students. So I think the idea really is what we're trying to do is, I think we are introducing a new technology and also a new process to the ecosystem. I think that's something that we definitely want to see it expand and actually grow further. So a lot apart from just looking at the traditional assets, traditional classes, and even the treasury process, I think got to be more open, and also to actually have a conversation with us, or even not just us, but just a lot of startups in general. I think you see that in other countries around the globe, a lot more startups actually coming up. I think that there's a reason for that. It's really because the way that some of these startups are doing, and the technology and the process that they're introducing to the whole ecosystem does really impact, and will actually eventually change a lot of our lives. So I think not just this taking like the global example. I think even Malaysia, there's quite a lot of like reputable and also well-deserving startups that actually doing you're just going through the grind to actually get a lot of their technology and their services out there. So just be open and try something new.
Like that,
Yeah.
like that, about being open. I mean, it's great, guys. I mean, everything that you're saying about where you're taking CapBay, and how you intend to continue serving at one end the underserved SMEs, and then at the other end, a new investment asset class. It's just great, and I think for myself, and I don't usually say this in conversations, but certainly I think as you know, MIDF, we've just commenced negotiations for a corporate exercise of some sort. And, we hope that this is going to give us a platform for future growth and offering more products to new and existing customers. And definitely we're looking for, avenues to collaborate with CapBay, because there are definitely many, I suppose, touch points of how, the services that you're providing would nicely dovetail with the where we want to take MIDF going forward. So, but with that, maybe I'll just ask Darren and XX any last words before we close off. We close off for today.
Reach out to CapBay.
Yeah. I just wanted to just very quickly thank the MIDF team. I think on behalf of Xing Xian as well as the whole team in CapBay, I think thanks so much for inviting us. I think it's been a real pleasure talking with you, Farouk. And to join, I think I've seen your past attendees as well. Very, very reputable, very distinguished people. So we're actually very honored to be part of this MIDF Conversations. Very interesting initiative.
Thank you.
Thanks for the opportunity, really.
Yeah. No, as you said, we will definitely be in touch, and so we're also very excited to have and as I said, an award-winning startup, and I believe CapBay we will see more of CapBay going forward. So thank you very much for a great chat. I think we had a good time this past hour. So I also want to thank our audience, but also please join me to thank Xing Xian and Darrel, who are not brothers. I just have to clarify this. They're not brothers.
Yes.
They're not
Yeah.
the same name. And similarly, Edwin and Dion are not brothers as well, even though they have the same name.
Great.
So thank you very much, everyone, and hope to see you again at the next MIDF Conversations next month. As usual, you get the flyers and the banners. Do tune in. Thank you again. Bye-bye.